Hi everyone, this is the lecture 12 of the 2026 mentorship program, and in this lecture, I will be doing a top-down analysis market review on this week live top-down analysis. On the weekly time frame on the dollar index, last week I talked about price running out the sell side liquidity. I told you guys that my draw on liquidity is to see a complete run after price respected the weekly order block. I want to see a complete run on the sell side liquidity. Now, this week, price traded aggressively with a lower dollar aggressively this week, taking out the sell side liquidity. And after price took out the sell side liquidity, there was a brief retracement on Wednesday, Thursday, and Friday, leading to price closing above the opening price. But the gap in price and Monday and Tuesday price action was enough for price to run the sell side liquidity. On the daily time frame, I talked about price retracing to a daily point of interest before trading lower to run the sell side liquidity. Which clearly you can see the price took out the sell side liquidity, but there wasn't any retracement to a daily point of interest before actually trading lower. So on Monday, price opened with a gap, retraced mid-range of the gap. Tuesday, price traded lower, took out the sell side liquidity. Now there was a intraday setup in price trading lower to run the sell side liquidity. Wednesday, retracement back to the range, forming a swing low, which means you will be anticipating a counter trend to a daily point of interest, which is Wednesday's high and above the opening price on Monday. Thursday, price traded higher before closing at the opening price, making it a doji candle. Friday, complete retracement. Price haven't retraced to the point of interest I'm currently looking at, which is the daily fair value gap. I'm looking at price retracing to the daily fair value gap as a counter bias before actually anticipating lower prices, leading to this retracement. On the 1 hour time frame, after the closing price on Wednesday, after price formed the swing high, you can see there's an internal shift in price trading higher, running out this high, going above the opening price, retracement to a 1 hour order block. Now, this is another block for you to look for an entry. You'll be anticipating higher prices to price to run the swing high. Now, these are times where you have a bias. Price already traded to the bias at the early part of the week, but there's still a chance of a possible draw on liquidity, which can be an expansion or a correction, or you can say just a counter trend to a draw on liquidity, which in this example is a counter trend to a draw on liquidity, which is a swing high. After price formed the swing low on the daily time frame, in most cases you will anticipating a retracement to a daily point of interest. Daily point of interest was the swing high for me, and the overall was the high. But the closest draw on liquidity and the low hanging fruit is the high. So after price traded higher, shift in structure, entry, anticipating higher prices, price took out the high, retracement to a 1 hour fair value gap, respected it, which was on Friday before trading to the draw on liquidity. On the weekly time frame on Hero USD, last week I talked about price running at the buy side liquidity, telling you guys that knowing that Hero USD to the dollar index is an inverse correlation and we are anticipating lower prices on the dollar index, there's a more likelihood of price running on the buy side liquidity. Which price took out the buy side liquidity and traded lower back to the range. On the daily time frame, on Monday, price traded higher, traded above the opening price. Tuesday, price retraced, used the opening price as a support to run the buy side liquidity. After running the buy side liquidity, Wednesday closed back into the range of Tuesday's range, forming a swing high, For a counter trend, you'll be anticipating lower prices to the daily fair value gap because it's well aligned with the dollar index. Thursday and Friday anticipating lower prices to the dollar index going in the week. Which last week I talked about price running at the buy side liquidity was using the daily fair value gap as a support before the run on the buy side liquidity, which you can see clearly price did not use the daily fair value gap as a support. It traded from the opening price, took out the buy side liquidity. The only possible trade was a counter bias for price to retrace to the daily fair value gap. On the 1 hour time frame, after the close on the Wednesday candle, price did an internal shift, took out the swing low. Now you know that the internal shift is correlated with the dollar index. After the run on the swing low, retracement to the breakers block, we expected it. Traded lower. Target is the daily fair value gap. Created a swing low, retracement, 1 hour fair value gap, traded lower. These are areas for you to take advantage of the setup, knowing that there might be a counter bias or a counter trend in price retracing to the daily fair value gap. So these are areas where you'll be taking advantage, which is the breakers block, the 1 hour fair value gap. At the same time, it's still aligned with the other block. Here's the other block, but you can see how price traded to the other block. At the same time, staying below the mid range of the 1 hour fair value gap before trading lower, which our drawn liquidity is the daily fair value gap. Going in next week is a clear perspective to set a price of support from the daily fair value gap. On the weekly time frame on GBP USD, last week I talked about price trading higher to run the buy side liquidity. I told you guys that's my draw on liquidity. I want to see higher prices to run the buy side liquidity, which you can see that how price traded higher took out the buy side liquidity before a retracement, but price still closed as an up close candle going in next week. On the daily time frame, last week I talked about price retracing to use a daily point of interest as a support before the run on the buy side liquidity, which you can see the price did not retrace from the opening price. Price traded higher, took out the buy side liquidity, and at the same time, from the opening price, there wasn't any retracement aligning with the idea which was explained, but the draw on liquidity was to see price trade higher to run the buy side liquidity. On Monday, price traded higher. Tuesday did the run on the buy side liquidity, both liquidities. Wednesday, retracement, staying within the range of Tuesday's range. Thursday, price the retracement to the daily fair value gap. Friday, traded through the daily fair value gap. On the 1 hour time frame on GBP USD, after the close on a Wednesday candle, I wasn't anticipating lower prices. Now, the reason was that there's a daily fair value gap, and price might use the daily fair value gap as a support to run the buy side liquidity. Now, knowing that it's not correlated with the dollar, I wasn't going to be taking advantage of that setup trading higher. But to know that there's a possibility of price using it as a support to trade higher, I wasn't interested in taking any sell on GBP USD after the retracement to the daily fair value gap. Now, there was an intraday setup for a counter bias for price to retrace the daily fair value gap. But after that, I only put my focus on Euro USD, which was aligned with the dollar index completely. Where you can see how price traded lower, traded through the daily fair value gap, and you can use this as a study case to see how price traded through the daily fair value gap. On the weekly time frame on USD JPY, last week I talked about price retracing, running out the sell side liquidity. The idea was that after price took out the buy side liquidity, you can see there's a swing high And last week candle closed after taking out the sell side liquidity and after trading through the daily fair value gap. I was anticipating a lower trend because it was still aligned with the dollar index, so that made it a high probability setup for price to trade lower to run the sell side liquidity. On the daily time frame on USD JPY, last week I talked about price retracing using the daily points of interest as a resistance area to trade lower to run a sell side liquidity. That I'm anticipating lower prices, but I want to see a little retracement to a daily point of interest before actually anticipating lower prices. Which on Monday price traded lower, took out the sell side liquidity. Tuesday led to lower prices. Wednesday retracement back to Tuesday's range. And you can see the structure is well aligned with the dollar index of anticipating a counter trend to a daily point of interest. So on Thursday and on Friday, I was anticipating a retracement back to a daily point of interest as my target. On the 1 hour time frame on USD JPY, after the closing price on Wednesday, which was aligned with the dollar index, here was the closing price on Wednesday. Price retraced to a 1 hour point of interest because there's an internal shift leading to the retracement to Tuesday's range. There was an internal shift, and we're anticipating a counter bias to a retracement to a daily point of interest. After price retraced to the 1 hour order block, we expected it traded higher. And you can look at this price as a study case for you to learn how to trade counter bias. Now, I wouldn't advise you guys to go all in into a counter bias if you don't know how to trade it correctly. What are the key factors for you to wait for? What are those elements in the chart? Which is a clear element, is just that you need to see the daily time frame forming a swing low or a swing high, and there's a possibility of price retracing to a daily point of interest. Now, forming a swing high, forming a swing low, looking at those candlestick patterns will give you a clear clarification on where price is actually trading to. Those are the times you take full account on what is the candlestick telling you to do. So on the 1 hour time frame, you can see the internal trend, which was aligned with the bias in price trading higher to run the buy side liquidity. Now we have gotten to the 12th lecture of the 2026 lecture. At this point, you should understand daily bias well enough for you to derive your own bias. Understand what price is doing, learn how to implement it on your own chart. Now pick one currency which you will stick to, which I will advise pick from the three currency I'm currently using so that you can understand, so that I can guide you through the year for you to understand how to anticipate bias correctly. So pick from those currency, pick one, study on that currency, backtest on that currency, have a clear trade plan. At this point, I'm expecting any trader going through the lecture, if you're a beginner trader or an experienced trader going through this lecture, at this point, I expect you to have a written trade plan for you to go through. Now, I will be showing you guys my written trade plan in the next lecture so that you guys could see my own trade plan to learn how I implement my own trade plan and how you can do the same. So I'll be showing you guys my trade plan on lecture 13. But at this point, I expect every one of you to have a trade plan based off the lecture and based off what I taught on the 2025. I expect you guys to have a lecture. And seeing how I've been applying it correctly, you can easily copy or you can easily understand how I decide my bias on every individual time frame. So that is it for this lecture. See you guys in the next lecture.